Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst in GDMFX. Welcome to today's European Session Market Outlook. Starting with North American markets, as usual, yesterday, no movements pretty much for the Dow or the Nasdaq. The Dixie Index, though, was down to 97.20 from 97.54. GDP annualized for the third quarter, 0.1% weaker than expected and 1.5%. Personal consumption expenditures price quarter on quarter weaker than expected and 2%. Core personal consumption expenditures prices quarter on quarter 0.1% weaker. GDP index 0.3% weaker than expected. Initial jobless claims 3,000 better than the expectations. Pending home sales year-on-year 3.1 lower than previous and month-on-month 3.3% weaker than expected. The US economy cooled off in the third quarter as companies cut back production to prevent a worrisome buildup in inventories, particularly of goods designed for foreign markets. The slowdown stemmed mostly from the biggest drawdown in inventories in 3 years. Companies also cut spending on structures such as oil platforms and commercial buildings. Yet even as businesses showed more caution, consumers continued to spend money and steady clip and sign they are not as worried at all. Consumer spending, the single largest determinant of US economic growth, rose at 3.2% annual pace, following an even larger gain in the second quarter. The overall weak data from yesterday did little to shift investors' views about the timing in the next Federal Reserve's interest rate hike. For today, we have a few, let's say, tier 2 news. We're talking about personal income, consumption, also expenditures, personal spending. We have the Chicago Purchasing Managers Index, and also for Canada, the Gross Domestic Product month-on-month report. Moving to the European markets, yesterday the DAX 30 went down 80 points, followed by the CAC 40 points down. European shares were seen opening higher today following gains in Asia overnight as investors shrugged off a decision by the Bank of Japan to keep monetary policy steady. Germany's CPI year-on-year 0.3%, estimated 0.2, previous 0. Month-on-month and actual were pretty much the same, no change there. Harmonized CPI, actual 0.2%, estimated 0.1. German unemployment rate as previous and as expected at 6.4%. The unemployment change minus 5,000. Consumer confidence in the Eurozone as previous and as expected minus 7.7. The economic sentiment 105.9. Business climate 0.44. It's an uptick. And Spanish retail sales came positive. The biggest movers were against the Aussie, the yen, and the New Zealand dollar around 100 points even further. Today, we have the CPI and unemployment rate in the European zone and also retail sales reports from Germany. Moving to the Asian Pacific markets, the Nikkei down yesterday 150 points, currently making a retracement. The Bank of Japan kept monetary policy steady, likely sticking to the view that a tight job market will lift wages and consumption enough to accelerate inflation towards its 2% target. The Bank of Japan reiterated its pledge to increase base money or cash and deposits at the central bank at an annual pace of 80 trillion yen, which is about 660 billion US dollars, throughout purchases of government bonds and risky assets. The decision was made by 8-1 vote. The BOJ will release new long-term economic and price forecasts in its semi-annual outlook report due out at 3 o'clock p.m. This is today. Bank of Japan, Mr. Karuda, the governor, will hold a news conference at 3:30 p.m., which is 6:30 GMT, to explain the policy decision. Japan's exports of cars, trucks, and buses rose 2.2% on year in September for the first time in 2 months. The Japanese Automobile Manufacturers Association quoted the numbers earlier today. Japan's stocks jumped, leading Asia shares higher as the Bank of Japan refrained from expanding its record stimulus program. Oil fell, while U.S. equities index futures signaled gains. China's decision to abandon its one-child policy, the move risks falling well short of reversing a trend that threatens to throttle the economic growth. On the Pacific front, yesterday we had the building permits in New Zealand minus 5.7% down from minus almost 5%. The Aussie private sector credit month-on-month 0.8% better than expected of 0.5%. Also, the year-on-year reading was also positive. Two of Canada's biggest investors are battling for control of Australian port and rail assets. The contest reflects demand for Australian assets from ports to electricity grids and desalination plants, as Canadian firms are drawn by the nation's relative stability, cultural similarities as well, and almost quarter century of economic growth. Canadian investors have always seen value and stable returns here, particularly in infrastructure, logistics, and agricultural assets. It also gives them exposure to Asia, without some of the risks having to be in Asia themselves. Foreign acquisitions this year have jumped to a $70 billion compared to a $40 billion for all of last year. On Sunday, we have performance of MFG index for the Aussie, securities inflation as well, month-on-month, year-on-year. Next week, we have the Royal Bank of Australia interest rate decision and statement. Also, for the Kiwi, participation, employment, and unemployment data on Tuesday as well. For the commodity sector, yesterday, the S&P 500 index had a range of 14 points, currently very close to the 2,100 mark. Natural gas storage change in the US in the week ended October 23rd rose by 63 billion British thermal units, below expectations for an increase of 69. Natural gas futures pushed higher to move further away from the lowest level in more than 3 years. Yesterday, after the data showed natural gas supplies rose less than the expectations last week. Stockpiles are set to reach a record by the end of this month. The EIA sees storage levels peaking at 3.956 trillion in November, which would top the November 2012 high of 3.929 trillion. With regards to oil, Iran may roll global oil markets with plans to sell about 45 million barrels of fuel stored in tankers in the Persian Gulf within 3 months of the removal of sanctions on its economy. Crude futures dropped in Asia trading today after the release of the report showing that U.S. economic growth had slowed sharply, reinforcing concerns about sluggish demand. The WTI had $1.50 range yesterday, currently at $45.75. Gold plunged more than 2% yesterday, erasing all of its gains from the previous 3 weeks as investors reacted to the strong hints from the Federal Reserve. Gold had a range of $18 yesterday, trading at $1,148 per troy ounce currently. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye from me.